avoided some chop here toward the end of the day to get maximum quick profits, okay? And this is a tactic that works any time of the day, not just at the end of the day. But at the end of the day, it's even more important to miss chop because some of these candles could be the difference between an entry being profitable or not, right? And so we've got this downtrend we had been fighting all day long, right? So I put on the chat, hey, we're above the 0.25, but let's wait for confirmation break before we enter. Okay. And so on this trade, there's a couple things I'm watching. We have this uptrend starting, we have the downtrend. So of course I want the break of that. The other two things that were my indicators for buying is we're constantly above the 0.25 with the wicks on the bottom, right? So I put in the chat, hey, I think up, but let's wait for the confirmation. Now, for the confirmation here, I like to wait for the 5-minute candle close, then the next candle starting red, and then I buy the wick up from the confirmation area, right? So meaning the trend break. The other thing I like to wait for, we already had 2 moves, right? So we had this kind of buy up here, retest, then we had this strong candle. One of the reasons I know this is gonna chop toward the break is because this candle didn't have enough volume to push up for the break to test the trend. So the second I knew we weren't making it up there, chances are extremely high probability that we'll chop until we get to the wedge. Whereas if this candle would have gone up and tested here, we probably would have saw just a little dip and then a break because it had more volume pushing it.
On that trend line, like when you drew it, can you kind of zoom out maybe to the left and just okay, so you have all the touches from early in the day and then late morning. So that's where all the like your extended, hey, we need to break this came from that morning line extended. Okay, got you.
All the way down, yeah. And I just right here, I moved it down where we cut off some of these candle bodies just because this was such a hard sell-off, right? I didn't go all the way down to the candle body because we still have these other touches, right? So I lowered it down a bit to include that wick. Okay, so on here, I wait because of those things, right? When we come down, we're going to hit the 9. We're going to chop a little bit and go toward the wedge. Then I'm waiting for the crossover of the EMAs, the break of trend, the retest of the 0.25 that wicked up and confirmed for us. And then I enter, right? So you have multiple reasons to buy here. Now, over here, you could say, well, we dipped, retest it. And if you were to enter right here, the problem is you only have, you're sure you're above the 0.25, but you're nowhere close to your trend to the top or to the bottom, right? So you either need to be buying clear, like if you're going to buy early, you got to buy ugly if you're trading toward the end of the day or if you're trading like short-term options. You can't buy here because it's in the middle of the top and the bottom of the wedge. So chances are if you buy here, you're going to go huge red, maybe even get stopped out and then not hit the trade. So my
So you're
advice,
saying because you're under the trend line, it's like, hey, look at the wicks. Like it's easy after the fact. Hey, the wicks stopped after the trend line was broken. Bears capitulated. Bulls up. Like after it's easy, but then it's like you're like, okay, wick, wick, wick. You have the trend line for a little bit of guidance. I mean, a lot of guidance. And it's like you want the wicks to stop where the next candle isn't wicking under the candle body, right? Like let's say the candle after that hammer above your trend line, let's say
yep.
that wicked down and it was more flat. You're still waiting to get above the hammer, right?
No, I buy like this the big green candle here, that was at 105 my time. I'm not buying this candle. I'm not waiting for it. I'm buying the fact that this candle here, I got a double close above trend.
Full candle bodies above it and the last candle body high
Correct.
closed above it. Yeah.
Yeah.
So somebody
So
just said, "Do you use the only 5 minute only to confirm?" I said, "I'm going to say let's list is confirmations." And then I'm gonna type out
yep. Yeah, so for
okay.
me,
So above
confirmation, 5
trend
minute
line.
above the trend, yep, close, and then the retest that wicks up.
was the candle body, and which is a green candle, which makes the close at the top. All right. Obviously, if that candle would have wicked down and stayed flat with the last hammer before it, you're not in because it's under your trend line.
Exactly.
Okay. And then you have hammer candle outside of the trend line. And then that's it, really.
Yeah. And then basically all you're doing then is you're in, right? And this is so close here. This level I wasn't really counting. I had a box. I put this all in the chat too. So I know that it's like, hey, this sounds easier after the fact, but you can search in the chat. Like I put this live as well. So I'm not just like trying to make this up for you guys. So I had a box right here, right? That was
I
all
saw that.
the prior lows. Okay. And so I put right here when this candle was getting up here, I'm like, hey, this is your first trim because we could reject off that box. But I said, I think we get VWAP. We came close here. I trimmed everything but runners here. Okay. And then we wicked down, it chopped, and yes, it went. I sold these here on this secondary push, my runners. I didn't wait for this just because it chopped too much. I didn't
Yeah.
like the
Like one wick down, I'm getting giving back my why at that point. Gotcha.
exactly. So anyway, so that's the play. But I just kind of wanted to outline a little bit over here, you know, in that above the 0.25 and the EMAs, but not past trend on why these entries here are tough. Like you never want to buy in the middle. You want to buy right at the break on a confirmation where you're close to the uptrend, where you're going to get moves, right? You're starting to see the EMA cross, you're above trend, you're holding the uptrend, you're above the downtrend, right? So you have multiple reasons why you think this is going to keep going. But you also are extremely close to where you can cut if it's going to be wrong. Okay? If you lose like on this trade, right here is your zone, right? This is where the volume was holding with the wicks. So my stop loss on this, at first, I started at the 0.25, and then as soon as this candle gets like here above these candle bodies, my stops break even,
So
right?
someone just said, say you bought 50 contracts. What is your split on scaling? Like when you buy in right there, you're in
Yep,
your full position. There's nothing to scale because it's so fast, right?
exactly. So these are scalps. So like on a scalp, I basically I have my target one, right? Which is the main move of the scalp. When I get there, I'm selling 75%. Then I'm selling another 10%, and then I'm keeping 10% for fun.
Yeah.
But to put it in perspective, this candle on this trade from here to here, I had $10 contracts of 69s, 669s, and the 669 went from 10 cents to 23 cents. So it's a 130% move. So I mean, if that's not good enough, I don't know. You're in the wrong game. So it's
Even 50% is like a nice
yeah.
win.
So it just kind of depends on these were like 50 cents, like right in here. They're 50%. They move that quick. But anyway, so like this, if you're in a 1 DTE, you can hold this, right? Because you're holding your level, the same level over here. You can see these hold candles and these hold candles here. This late with a zero, you really can't. But if you were on like a 1 DTE or something, you could hold for this secondary break of VWAP here, right? But I just wanted to go over why like here I would wait and get over here. Dodging this area will save you a lot of stress in your life when you're trading, right? You don't, like I always say in the chat, least amount of time in the trade with the most amount of profits. That's what I'm after. And the reason for that is I don't like buying things and holding them for what is this 5, 10, 15, 20, 25, 30, 40 minutes of up, down, maybe. I don't know if I'm right or wrong yet. Oh, great, I made money. Or, oh crap, I just lost 50%. I don't like that. It's too stressful for me. So I just wanted to go over that. I think that it's a pretty simple tactic. You can use it at other parts of the day too. Like earlier in the day, right here, I had this drawn in the chat, but it was more like this at the time, right? And right here, I drew this pattern, right, that we went over with Amy yesterday. She put the probabilities of all the pattern breakdowns. And I put on there, look, if we confirm below, you know, we're probably going to go, down. And instantly, as soon as we went down, right, we broke the channel. We came up, started green, wick down. The second we get below these candle bodies, I'll put a, right? The second we're below that area, you see that action where here we cleared out the level, came up, we hit the going toward the top of the zone, the 9, and it couldn't get up past the 9 EMA, and we wicked down, then again wicked down, but this time we got momentum below. So right there, that triggers my buy because we cleared the low and we retest it and came down. Instant drop. And you can see my target level down here almost nailed it. Wick up, and then this would have been a times 2, right? You chop, chop, chop. We retest and still can't get any momentum. Wick down, right? I'm not buying this. We retest the zone, clear out the next level down now, right? Because we're in a trend stare. My entry right here.
The candle body breaching those wicks.
Correct.
Correct.
That's
Yep.
going where we got the retest, right? So we cleared out the wicks, got the retest. When we get below them again, back in. Now I would have rode this down, probably would have got stopped right here, right? And then you could look and do it again, right? Like you can scout these moves pretty easily using that system. But the trade is right here you would have bought. I didn't have the fibs there at the time, right? So you would have bought here with the target to go back down, right? So you would have held the drop. The second I see this get above the wick, I'm going to be trimming some right here. But I would hold and we never get above the 9, right? So I would have held through that and then I would have got some trims at the target here. And then this green candle being above this my line and everything, this green candle would have stopped me. But you could very easily ride this move down to the blue line for a times 2. So one huge payday with the quick flush and then the secondary test down. Both of them confirmed with what I look for as far as the retest and the fail of the zones and of the EMAs, the levels, everything. Does that make sense?
Yeah. I think like the biggest thing is just patience because you see the play developing and then it's like when do you pull the trigger, and that's the difference between making 3 grand, making $500 and getting stopped out for 500, 300.
Exactly. And like I see a lot in the group, like people taking positions. I don't want to say they're bad positions, but like when you have, like I see a lot of people, they'll buy like right here calls and then they'll ride this up and then ride it down and then wait for it to break and ride it again. If you're buying within the pattern, you have to respect the pattern with your capital. You're in, you're out. And then you wait for it to come down here. And if you want to play it again for the calls, you play it, you get stopped, and then you take the puts, right? You can't play this up, oh, it didn't break, and then ride it back down, hoping it goes back up again. You've got to respect the pattern, right? So we knew this is the pattern. And a lot of times these do, let me get my drawing tool here real quick. Where'd it go? So a lot of times, right, we do see these get the hard down, up, down, and then this like this, right? And then go. Like that does happen a fair amount as well. Once we wait though for the confirmations on this or on
That's
this,
what happened
it's high
today
probability up or down.
at 11:30. That last leg down at noon on your thing turned into an inverse head and shoulders. So kind of what happened.
Yeah, so anyways, I just wanted to go over that real quick. It's a simple thing. I know that it sounds simple, but I also know like in the moment it's very hectic or confusing. When you look in here, this box here that I'm drawing, you know, hey, let's wait. Sorry, let me get one thing here real quick. Okay, so right here, this box, it'll line up too with like where we had this SR rejection, right? So here we're waiting, right? If you want, you could trigger and enter in early here and then it went red. Like I could see people buying off of this here if you hadn't had the downtrend on the same levels and stuff as me. And it sure you would have went red, but like still no close, no reason to cut it, right? You held the 0.25 and you would have gotten back out. I just waited till here because of the trend, right? If we hadn't have had that trend, I would have bought over here. Okay. But anyways, so this is what I'm talking about looking for areas of confluence, areas where you have multiple reasons to buy a trade, right? Will save you a lot of time and hassle of buying early and then going negative and getting chopped up. So I look for these confluence zones and areas within the price action. I look at the wicks within the pattern to help me see the price action going a certain direction. And then from there, the trades come that are quick and easy, with low stress. So that's why I like those. If anyone has any questions, I can answer them here. You could throw them in the chat, but I just kind of wanted to do a quick little review as all. Or if you want to come on voice, you can just ask it. Yeah, so I do look at RSI. Really, the only things I use for RSI is crossovers or overbought, oversold. Okay. So like here, I don't really consider oversold until we're like down to the 20, right? So like say we're, sub 20 is when I'm starting like, hey, there's no way I'm taking puts. There's no way I'm doing that, right? Is 20 RSI. And then I look for to get like sell targets like here, right? We created this extreme low. I'll map that to here, and then if you go over to here, you'll see it'll correspond at almost the exact same spot, right? So I'll use that to kind of um, not guess low or predict low, but have a high probability of bottom ticking or top ticking a move, right? Same thing in here, like when I'm selling these, I'm watching to see if I'm extended on the RSI or not as I'm taking profits. But for the most part, I'll look at it, see if I'm super extended, like here for like a take profit, and then wait for a retest down to get back in if it coincides with the main chart. That's really all I'm using RSI for. But it's, here, like we get the crossover. I wouldn't have bought that. I would have waited for this next dip down and I would have bought here after the crossover. So yeah, I only use it on the 5 minute just because I'm mostly day trading. I'll look at it on like the daily and the 4 hour the night before to get like an idea. Like yesterday I looked at the daily, right? Like KT put in the chat last night, hey, look, Spy could have an abandoned baby, type of thing. And so like the night before when I'm doing my prep, I'm looking at, this pattern right here in this candle, and it's telling me, hey, I think we're probably gonna go down for a retest, right? I'm looking at that stuff the night before, and I'll look at RSI as well here. It's flat, so like it just tells me like, hey, we're probably not gonna have a huge move that's gonna send it because we'll probably chop a little up in these areas. So I'll look at it on the daily and stuff for swings or for like to make my game plan. But for the most part, it's 5 minute for my day trades. Okay. So if there's no other questions, we'll go ahead and tie it up. I just wanted to go over those things. If you guys have any questions on what we went over here, throw it in the chat. I'll answer just in the chat there, but we can stop recording and doing the live. I just wanted to kind of go over a couple quick things here that I thought would be like an immediate help for you guys.
Yeah, I appreciate it. So if you didn't have that trend line, let's just say on your screen,
Yeah.
then there's like kind of no, maybe with that box you would. Like what I was drawing earlier was pretty much that trend line. If you want to add it back, Control Z, um, or click back, whatever. I don't know. But so then, um, what I was doing in the chat was, hey, as this trend line gets more sloped, it's more bearish, and another thing is more likely reversal because it doesn't slope down hard all the time. You're gonna have basing and stuff. So the next thing I did was like 11 a.m. From that 11 a.m. drop to like make another trend line from
Right here.
11 a.m. No, uh,
So
the
this is
one on your
11
screen
right here.
to 12. I've, that's where the new trend line would end right there, and it's
Yeah.
gonna begin at 11 a.m. your time above the price.
Yeah. So you had like this one here.
Exactly, like
Yeah.
kind of under, yeah. And I said, okay, so we're getting like the Vommy videos. You know what I'm
Yep.
saying? At what point do you get the inverse Vommy, the bullish Vommy at that point? So you at that point, the wicks right above that starts to SR test the wicks that you were going over with the for the whole time basically. You know what
Yeah.
I'm saying? Like by then you're up 40% anyway, 30%. So it's like, it's not like it's not like, yeah, it's going from 50, but like you obviously would have taken your first cut on that pop. So
Yeah. For sure. But like,
you're
yeah,
not above the 0.25 there though. You're still under the 0.25, so it's risky.
exactly. Yeah. I mean, like this could have kept going. Like this really could have failed right here. It's just
Yeah.
the wick up and then we got some volume. But even then, the volume, like part of the reason too, I didn't want to jump in early. If you look at this on the volume chart down here, guys, you'll see like, okay, these red candles, not super impressive on this little dip. Then we get this green candle, but it's not like huge volume
Yeah.
green candle, not to
And
match the amount of
if you
movement.
look at the lowest candle of the day, that lowest red candle of the day at, right there. What at
Yep.
keep going left a little? No. It's like I can't even see the time. Right there. Yeah. So you have that candle. The
Yep.
volume, let's just forget the volume. Now you have volume on the next two candles, higher, fine. But it doesn't push up with a measured move, meaning the length of that candle, if you were to put it on top, it doesn't get there. Now you have lowering volume, which is fine, but the lowest volume, like 4 bars to the right, maybe, or five, go to the right, like right there. And
Yeah.
then there,
This,
yeah, the very next one you were on.
yep.
Now you have the highest volume, let's call it, if it's tied, fine, but in that last 5, 10, 15, 20, 25 minutes with a very small candle body. And to me, that means a move is coming up or down. In this case, okay, it's up. Like you said, it could have just dropped, but it's like we're out of that trend line potentially, um, but it could have sold off. Like that's like it sold off earlier. I had the
Yeah.
biggest volume of the entire day at 10:30 a.m. Technically, at 10 like 40, you get that green candle, which is
Yep.
like two more to the right, two to the right, the green candle after that to the right.
Oh, right here.
No, the
This
full
one.
body. There we go. Right there, if you draw a line from 10 a.m. to there, you're breaking above the trend. But immediately you get a high volume sell. So it's like you have no confirmation. That that is a bullish harami. You're at the top half of the candle, but it doesn't push above the candle and it's red. Like the very next candle, it wouldn't be an E-Trades entry because the very next candle is below. Like Nick, look at the one to the right.
Yep.
One more. It's like right under. You would have to clear. You know what I mean? Look at that
Yep.
candle. Totally like
Well, that
invalidates.
I like to look at these. Like I use these white boxes, which could be hard for people. to see, I guess. But like if you look like here and here, right? Let me go like that. It might be easier to see that. If you see these wicks and candle bodies, we can't get above them, right? And then when we see this, all I'm looking for is just a little retest before getting in, right? Because
Right.
you're basically,
Failure of the
yeah, we have SR flipped, and we got a huge sell off, and now the bulls who bought this up to cause the wick, they can't keep going. Like that's all that is. And so the second we get that, you're done. Now here, like I get like buying a little early here because we did reject hard sale. Like a lot of times I'll buy this here, right? And then I'll go a little red and then it'll pay out, right? But you still have a clear SR area where you're getting stopped and you're buying very close to it. The other thing, like here, like if you were to take this entry here and it were to chop, I would just hold it for, 10, 15 minutes, maybe 20. And if I don't get the move, I would just set a sell for break even. And on one of these wick downs, I would just get out. And then I would just wait for a new position. Like if you miss a little drop or whatever, fine. Like just protect capital. Like if I'm not getting the move that I'm expecting to get within 10, 15 minutes, that's a sign for me to start protecting capital. Why? Because options are time based things. So you have to respect the time, not just the chart. So it doesn't mean you're wrong. It just means you were early, right?
there's
Just
the
get
two
out.
things that get me out of the trade, or let's say I'm in calls there. Let's just say the two things that get me out of the trade are this is taking too long. I wish I weren't in this trade. That means I should probably cut. That's number one. And number two is I wish I were in puts instead of calls. If either of those things cross my mind, I'm like, I need to get the F out now.
Yeah, exactly. So, anyways, just some like kind of basic candle price action SR flips working in conjunction with your, EMA crossovers and your patterns. Looking for multiple confirmations will save you a lot of time, a lot of stress, and a lot of money. Now, like I said, if this candle had been big enough volume to get us up to the trend, a lot of times then what'll happen is we'll get a little dip and it'll make like a bear flag or it'll make like a bull flag and then it'll break and keep going. So what I usually do in that circumstance, I wait still for the break and then I'll play the flag. So I'll wait for the dip down and then play the bull flag. But if it on those, a lot of times that continuation from the trend to go more, I like to have already been in the trade. And if I miss it, if I'm not in the trade already, I just pass. I just skip it. So that's kind of how I look at those. But anyways, so hope you guys have a good day tomorrow. I'll be in the chat. Let's make some money tomorrow. Just wanted to give a couple little pointers here because I did notice some people enter early on this, and I'm sure it wasn't pleasant for them. Even though they ended up making money and it was a good trade in the end, no one likes to be, sitting on their chair puckered for 40 minutes. Okay. Hope you guys have a great night. See ya.